One thing we always come back to is knowledge is power. The more information you have about your market, your customer, your supplier, the better decisions you can make. Before you enter a market or sign a deal, ask yourself, what's my upside? What's my worst case scenario? And can I live with that?
Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/marketsplus for more episodes. The views expressed here are those of the participants and not those of BMO Capital Markets, its affiliates, or subsidiaries.
Hi, I'm Mayu Saravan. I'm the Managing Director and Head of Global Trade Canada at BMO. Joining me today is Yasmine Elgammal, Director of Finance at GA Paper, which is headquartered in Ontario, Canada. Like many companies active in overseas markets, GA Paper has faced many uncertainties in recent months related to the international trade environment and tariffs. We'll discuss Yasmine's experience in navigating the markets and managing risks, and we hope this will be beneficial to other companies facing similar challenges. Welcome to the show, Yasmine.
Thank you. Thanks for having me. It's an honor to be speaking with you today.
So we're seeing unprecedented market volatility fueled by geopolitical tensions and trade wars. How is GA Paper, with a business interest in so many countries globally, navigating through this environment?
Absolutely. It's a turbulent time, especially from a Canadian perspective. But for us at GA Paper, this kind of volatility is nothing new. We've been in the pulp and paper trading business for decades, exporting from North and South America and the Nordic countries to non-forest producing regions across the globe. We operate in over 50 countries today: Europe, the Middle East, North Africa, Latin America, the Indian subcontinent, and both East and West Africa. Because we've always focused on emerging markets, we're no strangers to unpredictability. We deal with currency fluctuations, capital controls, and ever-shifting regulations as part of everyday business. But the key to navigating these challenges, it's been deeply embedded in the markets we serve. Understanding the culture, the business climate, and the decision makers on the ground is crucial. You can't just rely on the headlines. There's a saying that we know so well: buy the rumor, sell the news. That holds true in our world too. You need to be ahead of the curve and not reacting to it. So at GA, we put a heavy focus on local presence. You can't fully grasp what's happening in a market unless you're there, building relationships, staying close to the ground. Our operations are built around strong banking and supply chain partnerships, and we're constantly assessing risk and adapting to new realities. We've been through it all: currency devaluations, strikes, sanctions, revolutions, and natural disasters. So how do we handle it? We stay close to our markets, analyze risk without emotion, and diversify regionally. But most importantly, we stay true to our mission. And here's the thing: volatility isn't just a threat, it's an opportunity. In the financial world, there's the phrase buy the dip. That mindset applies to businesses too. If you understand the fundamentals and you're well positioned, volatility can actually drive your growth. A great example is our work in Africa. We've always seen it as a key growth region. Just look at something like the diaper market: low penetration, shifting consumer habits, and some of the highest birth rates globally. Back in 2014, we acquired a company specifically focused on Africa to deepen our commitment there. That's a long-term opportunity. Now, with the US-China trade war pushing companies to diversify their markets, we're ahead of the curve. While others scramble to enter new regions, we're already there. Is that luck? Maybe. But as the saying goes, luck is when opportunity meets preparation.
Thanks, Yasmine. It sounds like GA Paper was almost perfectly positioned to react to this environment. As you know, tariffs and counter-tariffs are probably at the center of many business discussions these days. Being a medium-sized enterprise in this environment comes with its own set of challenges. Could you talk a little bit more about the direct impact that the global tariffs, counter-tariffs had specifically on GA Paper's business? And what are some of the tactics that you've been using to minimize the associated risks?
Yes, tariffs and counter-tariffs are very much at the center of international trade right now. For a trading company like ours, the biggest challenge isn't necessarily the tariffs themselves, it's the unpredictability that comes with them. We're moving goods across oceans with transit times ranging anywhere from a few days to over a month. If a tariff gets imposed once you've concluded a deal or after a shipment is already loaded on the water, it can completely flip the economics of the deal. And commodity trading, where margins are razor thin, you can't just absorb these costs. And pricing in potential tariffs is nearly impossible when the rules are changing day by day. So, how do we manage that risk? It starts with open and honest conversations with our customers. If we're exporting US origin goods, for example, and a counter tariff suddenly applies, we'll have discussions around whether that tariff applies to our specific product. If it does, we may need to renegotiate the terms or invoke provisions in our contracts that deal with unforeseen changes. If the goods haven't shipped yet, we'll often pivot. We might switch to sourcing from Brazil, Finland, or China, region where the tariff doesn't apply. That's why having a diverse supplier portfolio is so critical. The companies that thrive are the ones that are prepared before the disruption. We take a very pragmatic approach. We don't let emotion drive decisions. We look at the fundamentals. For example, US producers, some of them have such high production costs that they're simply not competitive anymore. Many have shut down in recent years, and that shifted the dynamic. If your whole supply chain is dependent on one country, especially one that's becoming less viable, you're exposing yourself to too much risk. So we've evolved. 15 years ago, most of our sales were from the US. Today, our portfolio is spread across South America, Europe, and Asia. One of the fastest growing regions for us is Brazil. Now, it's important to point out tariffs can be temporary. We've seen them imposed, delayed, reduced, overturned, sometimes all in a matter of weeks. So it's important not to overcorrect as well. The challenge isn't just tariffs, it's the pace of uncertainty. A lot of this is just an acceleration of existing trends. So during the pandemic, digitization didn't just start then, it just sped up. The same thing is happening with trade diversification. Companies and countries are being pushed to move faster. So at GA, we see that as an opportunity.
That's really interesting. Do you mind if we zero in on the diversifying the supply chain concept? That's something that comes up often these days when I speak with clients with overseas exposure. What are some of the opportunities that you're seeing when you think of new markets and potentially even new suppliers?
Diversifying the supply chain isn't just a trend, it's a necessity. At GA, we've seen firsthand how quickly conditions can change in international trade. That's why for us, supply chain diversification isn't just about finding new suppliers, it's about building resilience into the core of our business. In many of the emerging markets we operate in, governments play an active role in business. That means agility is critical. Our customers are used to adapting, whether that's accepting alternative but comparable grades of pulp and paper or adjusting production inputs on the fly to keep their business running. In a supply-constrained industry like ours, flexibility is a survival skill. In our world, when a corrugator's machine is sitting idle due to a lack of input material, it doesn't matter if the supplier is your usual grade. What matters is that the machine keeps running. That's where we come in and where our technical team, including chemical engineers, play a vital role. They work closely with clients to test new grades and engineer solutions that keep the supply chain moving. We've also learned from experience. Years ago, we relied heavily on a single supplier. It worked until market conditions changed and we realized how risky that was. Since then, we've intentionally broadened our sourcing footprint. Today, our portfolio spans across South America, Europe, and Asia. Latin America in particular is becoming a major growth hub for us. Now entering new market always carries a risk. What helps us manage that risk is surrounding ourselves with the right partners. For example, when you're entering a new country, you need a local partner who understands the regulatory landscape and the cultural nuances. You also need a reliable shipping and logistics network to make sure goods are moving efficiently across borders. And of course, banking partners like BMO are essential when you're navigating currency controls, letters of credit, or trade finance instruments. For us, long-term relationships really matter. It's one thing to find a partner when everything's going well, but when the market turns, when there are strikes, sanctions, or policy changes, you quickly see who's in it for the long haul. That's why we put such a high value on trust and consistency. Our 30-year relationship with BMO, for example, has been instrumental in helping us grow while also protecting the business. We've built a strong trade finance relationship with them, which allows us to operate confidently in challenging environments, whether it's through letters of credit, structured payments, or tailored risk mitigation tools. They've guided us through unfamiliar terrain and helped structure deals that would have otherwise been difficult without that foundation. So ultimately, diversification is about more than just spreading your bets. It's about building a network of strong, reliable, long-term partners who can help you navigate both the known and the unknown. And that's what allows us to turn volatility into opportunity.
Really appreciate the detailed examples and advice. We've been having conversations with clients that have started thinking about how their working capital may be impacted, something that you alluded to. For example, due to inventory buildup or the need to renegotiate payment terms with new customers or suppliers. What are some of the strategies that GA Paper is adopting as you're thinking through these potential working capital impacts?
That's a very relevant question. Prices are volatile, transit times are unpredictable, and relationships are often tested today. First off, we recognize that commodity markets move fast. Prices can rise and fall significantly in just a few days. If we were constantly renegotiating payment terms every time the market shifted, we wouldn't have a sustainable business. Our foundation is built on trust. Sometimes we win, sometimes we lose, but we honor our deals. That consistency is what gives our partners confidence. That said, we're not naive to risk. We use a wide range of trade finance instruments to support our contracts, everything from letters of credits and structured payment terms to credit insurance. These tools help us reduce exposure while still allowing us to operate at scale. We also make it a priority to work with customers and suppliers who honor commitments. If we notice a pattern of changes after a contract is signed, that's usually a sign that the partnership isn't long-term material for us. Of course, no one has perfect foresight. That's why having an open, proactive relationship with your banker is critical. We regularly ask our partners like BMO what tools are out there, what's new, and how can we better mitigate financial and operational risks. We also leverage institutions like EDC and BDC, especially for export-related supply. They've been incredibly helpful, particularly in emerging markets where local banking systems might not always have the same level of security or speed. At the end of the day, working capital is about protecting your liquidity while keeping your business moving. And to do that well, you need more than just cash flow. You need strong financial partners, solid contract discipline, and the willingness to adapt quickly without losing sight of your principles.
Thanks very much, Yasmine. So your experience navigating tariffs at GA Paper has been specific to your industry and your company's markets. But are there lessons that you've learned that other companies in similar circumstances, but perhaps different industries could appreciate?
Yeah, one thing we always come back to is knowledge is power. The more information you have about your market, your customer, your supplier, the better decisions you can make. Before you enter a market or sign a deal, ask yourself, what's my upside? What's my worst case scenario? And can I live with that? Often a downside case is taking a financial hit. But if it helps you establish a strategic relationship, gain market entry, or learn something valuable, that may be worth it. Another key is to stay flexible. In uncertain environments, things will shift. Customers may ask to renegotiate. A supplier may not deliver as expected. You can't predict everything, but you can plan. Have a plan B, sometimes even a plan C. A lot of Canadian companies are too comfortable operating in North America. When we say global, we often just mean we ship to the US. But Canada is one of the most multicultural countries in the world. Our society has strong roots in almost every corner of the globe. The question is, why don't our businesses reflect that? There are real opportunities out there. Sometimes in regions that were off limits or unstable a few years ago are now opening up. Take a market that's gone through major political and economic transitions in the past decade. Today, we're seeing sanctions are being lifted, diplomatic relations are shifting, and there's a growing population in Canada from that region. The Canadian government is paying attention, and so should Canadian businesses. These are early signals. The companies that explore now, not after the headlines, will be the ones to benefit. At the end of the day, success in global markets isn't about avoiding risk. It's about understanding the risk, being honest about it, and building a strategy that lets you stay in the game even when the waters get rough.
Thank you very much for your time and your insights, Yasmine. This has been an incredibly helpful conversation. I've learned that GA Paper's strategy of being able to be nimble, to adapt to changing market circumstances has been extremely beneficial to me, being able to so adeptly navigate the current geopolitical tensions and trade wars. The company's emphasis on building long-term relationships globally, including dealing with some of the more challenging jurisdictions, staying close to markets, and taking a pragmatic, unemotional approach to decision-making has been a key strength. GA Paper has a long-term view and accepts volatility and uncertainty as parts of the game when playing globally. You've been able to leverage financial tools offered by both banks such as BMO and other organizations that support Canadian trades such as EDC and BDC to effectively manage risk and working capital. I especially like the line that luck is the intersection of opportunity and preparation. I'll need to keep that in my back pocket for another conversation. Thank you again, Yasmine. I look forward to working closely with GA Paper as we navigate the potentially choppy seas ahead.
Thank you, Mayu. It's been a pleasure.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.